When we were sitting here chatting just moments ago, you voiced perfectly the same sentiment I heard from Tony Ressler of Ares and earlier this morning from David Rubenstein of Carlyle. Nobody knows why the market keeps going up. Why do you think the market keeps going up?
Well, I think part of it is everybody's got a lot of confidence in Gary Cohen, right? And people believe that because Gary's there, and my view is Gary's going to stay there, and he's going to get this tax reform deal done. So the market believes if that gets done, that's really positive.
Would you as an investor feel even more confident about the prospects for the economy, and in particular, the administration's handling of the economy, if Gary were chairman of the Fed?
I'd rather Gary's in the spot that he's in. I think that's
Why is that?
Well, because I think he's going to be able to get more things done.
Tax reform, for example?
Yeah, that's really it. So he's going to be able to do that. I think once he gets that done, then yes, then I think the Fed would be great.
You pay close attention to interest rates. You have to. You're in the credit business. And you have pointed out that there are some strange differentials, let's call it, between the rates on American sovereign debt treasuries and what it costs you to invest in sovereign debt issued by other countries. Let's talk about that for a minute.
Well, let's look at that. I think if you take a look at where the 10-year is in the U.S.
220.
Yeah, so let's say 220. The sovereign debt of South Korea ends up being at 225, 230. So as an investor, would you
This is the country next to the country that President Trump said he would annihilate.
Yes, yesterday. So wouldn't you be a little bit nervous that in essence the President of the United States is saying if there's anything that happens, we're going to annihilate North Korea, and I would assume South Korea is going to get hurt a little bit in that. Everybody
a little bit
talks
of collateral damage.
Yeah, a little bit of collateral damage. So the markets are telling you, I don't think that's going to happen at all, because they're willing to only get 5 extra bips for that risk. So either they don't believe that's going to happen, or the search for yield is so great, because in Europe it's negative yield, that people are willing to take a lot more risk than they should.
South Korea is a pretty darn good example. Where else do you see mispriced sovereign risk?
I think when you look at what's going on around the world, everybody's sort of looking at treasuries, where U.S. is, but anywhere outside, like I think in Brazil right now, or any of the countries south of the United States, you're able to get sort of 200 or 300 basis points more, and is that enough? So the markets are telling you that's plenty, and I sort of look at the world and say, okay, well, if all I'm going to get is an extra 2%, so we're buying a company in Brazil today. It's Boulevard 2, and we're buying that, it's a waste management. We're buying it at a 25% discount to where the comps are here in the US, and it's growing twice as fast. So I think what ends up happening on the equity markets, you're actually getting massively overpaid for that risk, whereas on the debt side, institutions just want safety, and they're willing to end up doing that for only 50 bips more or 100 bips more.
But would you not say that it is pretty hard to find anything that is underpriced today?
Yes, absolutely. So if you take a look, if you look at our stock market, that's all everybody talks about, that it's at best fairly priced. Most people would tell you it's overpriced, yet it still keeps going up. And the reason for all of that is everybody believes you're going to have this $2 trillion coming in from offshore that comes back, and that's going to bring about more jobs, and you'll get tax reform done. If none of that happens, I think you're going to see this market take a big hit.
Okay. And we have to wait how long to find that out?
I think you'll see that in 6 months. This has got to get done in the next 3 to 6 months. Otherwise, the market is going to start looking at it and saying, we don't think any of this is going to get done.
Okay, so between now and then, you've already cited Brazil as a place that you've gone shopping. I presume that you've got some kind of a short position on South Korean CDS.
Yeah, I would tell you, we think that's right now not fairly priced. That's correct.
What else is not fairly priced? You've been, over the past several years, as valuations have gone up in developed markets, you've been prospecting in European non-performing loans, for example. We've talked about that. Where else does it pay to actually bother doing the work?
So you could still be in Europe on the NPLs. That's actually still a market. You can make 10 to 15%. What's actually interesting is in Asia today, because of the slowdown in China and because of what's happening out there, you actually can do direct lending deals in Asia for around high teens to 20%.
Unlevered.
Unlevered. So you're getting massively, again, getting overpaid over there. And the reason for that is there's a bit of a slowdown. Even though China's economy is growing at 6%, it's a lot lower than it was before. So you're seeing that China is forcing its companies to start pulling back and not letting them take as much money out of China to go invest elsewhere. And those small companies that are $1 billion or $2 billion still need capital, and people are willing to pay you 15 to 20% because they believe that equity is worth substantially more.
So you're filling the void.
Yes, we are.
That previously was occupied by
banks.
Chinese banks and
Yes.
Chinese state-owned enterprises.
That's correct.
Deals of what size?
So they're deals that are anywhere between $25 to $75 million where you're lending that amount. The larger deals, that they're still able to get that financing. But the smaller deals, so what's happening is banks are saying we're not going to deal as much with really good companies that are small, that are billion or less.
These are not Chinese companies, I presume.
They could be Chinese companies, they could be Indonesian companies, they could be any companies out in Asia. What you're finding is small today, nobody wants to lend to you even though you're a solid company.
So how is it that you have enough people on the ground and enough expertise to be able to originate these credits comfortably? Because as somebody smart once said, the riskiest thing anyone ever did was lend money.
Yeah, I would tell you, the reason we're able to do it is we've got sort of 5 offices in Asia, we've got a number of people out there, so you've got to be on the ground. You can't do it out of New York, you can't do it out of Europe.
So over the course of, how much have you committed so far? Let's put it that way.
Right now we've got a couple $100 million invested, and we're ramping up to do more because we're starting to see more and more opportunity out there.
And you can do that out of your existing vehicle, you don't need to raise?
We're raising an Asia fund to do specifically that.
Yes. So this is an opportunity that you see lasting.
Yes, and we are starting to see that. It didn't exist 3 years ago, and that's because China and everybody else was lending. Today it's there, and we think that's going to last for the next 2 to 5 years.
Because of the slowdown in the Chinese economy and because of the clampdown that the Chinese government has put on the outflow of assets.
Capital. Yeah. It's a little bit of what you saw in Europe. One of the reasons we were able to do a lot of this in Europe is the ECB was forcing banks to end up deleveraging. So what that meant is that firms like me and Oaktree and Ares, all the people you're talking to, could go out there and lend money and do it not at sort of 2 or 3%, but do it at sort of 10%. So you were getting overpaid for that. And now you're starting to see the same thing in Asia.
It sounds to me like you're pretty excited. Would you call that the single best opportunity that Avenue has right now?
I think the single best is what we're doing in Brazil.
Okay.
I would tell you what we're doing in Asia is probably the next opportunity, and then also what we're doing in Europe. So we're finding a lot of things to do outside of the US.